Halving is coming up in less than 20 days. I have friends calling me right now about the upcoming Bitcoin halving, asking me whether or not they should buy Bitcoin. And so I want to look at history to see whether or not it is a good time to get a long-term position into Bitcoin. As you can see with this Bitcoin chart I have pulled up, I'm going to be going through some very easy technical analysis alongside with some very surprising on-chain metrics that we'll talk about later in this video. So make sure to stay tuned and like this video if you guys appreciate this content. But I'm going to go ahead and just dive straight into this technical analysis, and then we'll take some questions from our live audience. I see we've got Nicholas and David on right now. So this is a chart I've shown you guys in the past, and this is a long-term Bitcoin logarithmic chart that I've watched for quite some time. And recently, if we actually look here on the daily chart, you can see once we saw that big push down due to this global pandemic that we're all experiencing, we actually broke this long-term logarithmic bullish trend. And so I want the people who are watching this video looking to get a long-term position in Bitcoin to realize that we are not in the long-term logarithmic bullish channel that we were in over the last few years. And so this is very important to realize, because understand that as we get into some more technical analysis of what's happening over the next few days and over the next few weeks, realize that at the end of the day, for us to get above that $8,500 to $8,600 level is going to take some volume, and it's going to take some buyers to really come into this market. And you can see this orange line is when this Bitcoin halving is set to take place in less than 15 days. And we want to look at history and see how history reacted to the Bitcoin halving. And interestingly enough, what's very similar about this upcoming halving in comparison to the one that we had in 2016 is you can see this green line previous to the halving is actually when the 100-week moving average saw the 50-week moving average cross over it. And so interestingly enough, we saw both of those occurrences shortly before the Bitcoin halving. And so we can assume that price action is going to be similar to how price action was in 2016. Of course, in 2016, the price was at $400 to $500 a Bitcoin, and right now we're at $7,000 to $8,000 a Bitcoin. But understand that market structure is one of the primary principles of technical analysis, and so realizing that the market structure may be similar is a pretty solid assumption. And what you can see here is after we saw that weekly crossover, we saw an initial rise in price up until the Bitcoin halving in 2016 before we saw a big push down. And this is a pretty big chart. We're looking at a weekly chart. So this push down alone was about 42%. And that was after the halving that occurred in 2016. Now, you might ask, well, why would that happen? Well, realize that the way Bitcoin is created is through hash rate and hash power of miners. And of course, the majority of that is in a mining pool. But realize that when this Bitcoin halving takes place and supply gets cut in half, yes, that's good for the overall token economics of Bitcoin in a deflationary sense. But at the end of the day, the miners are going to be making less money. As a matter of fact, they're going to be making half as much as they were making prior to the Bitcoin halving. And so interestingly enough, when we look at how hash rate is reacting right now, you can see we were in an uptrend and we actually just started to form a lower low. And so now we're in a downtrend when we look at Bitcoin hash rate. Now, we could argue that this sort of market structure is a bullish structure where we've got almost like this cup and handle forming, where we've got this initial handle and then we saw this cup, and then maybe this right here is a handle and we break out from that when it comes to hash rate. But realize we're looking at the chart, we're taking a step back and taking a neutral perspective. I'm trying to be the umpire here and let you guys know that this is what the data is saying. I'm not going to play to the home team and say that I'm bullish or bearish. I'm just going to take a step back and show you the data. And so at this point, the data is telling us that hash rate is declining 15 days towards the Bitcoin halving. And so interestingly enough, we could assume that what that means is there are some miners that are starting to go offline because it might be unprofitable for them to continue mining. So we're going to be talking about a very interesting on-chain metric. So stay tuned. I've got another really interesting chart from Glassnode that I want to show you guys. But realize that so far from what we're talking about, this Bitcoin halving is an exciting event. It's something that's built into the code of Bitcoin as a deflationary property of Bitcoin. But at the end of the day, we have to be careful when it comes to saying that this is the perfect opportunity in order to put and establish long-term positions, when we know in the past we've seen over 40% declines in price post-halving before we then see the big run-up, right? I know a lot of you guys are talking about this big run-up, this exuberant push up, but understand that before that happens, we typically, or in the past, we've seen a decline in price action. So that's the first thing that I want to talk about. So realize that the main points here is, number one, the price action and the patterns are very similar to how they were in 2016, where we had this weekly moving average crossover, very bullish. And these were the only two crossovers on this chart. So there weren't any in between. And interestingly enough, after that crossover, we started to see Bitcoin's price rise up. Of course, that ended up failing because of this global pandemic. In 2016, there wasn't a global pandemic. And so you can see we're continuing the uptrend. We're still going up, but now we've got this overhead resistance at that $8,500 level. And yes, we're close to that $8,500 level. And that's going to bring us to our technical analysis to look at, well, what is happening with Bitcoin right now? So realize that 8,500 in general is going to be a very difficult place for Bitcoin to breach, just knowing that we have a long-term logarithmic pattern and a support level that already broke and is now going to become resistance. And realize that some people, they have their logarithmic charts. I don't know if you've seen this, say something in the chat if you have, but you see these analysts that post these curved logarithmic charts. Well, a curve is very subjective. Anybody can change their curve the way they want. I like to look at something more concrete, which is a parallel channel, right? So a lot of people show their curves, but in my opinion, we want to look at the channel. And it's interesting because most of those analysts used to show the channel, and then when it broke that support, they started showing the parallel curve. Maybe because they have a home team bullish bias, because they might have a lot invested in Bitcoin. Maybe their career is built on Bitcoin technical analysis and they want Bitcoin to survive. But that's not the type of analysis you're going to get from me. You're going to get the real deal and something rational and an umpire's point of view, where I'm not going to be biased on the bullish or bearish side. Of course, we want to be on the right side of the coin at the end of the day, but I'm going to talk about what the data is showing, what the analytics are showing. And so when we look at this chart here, you can see currently we're in this major resistance area on the daily chart. And when I say major resistance area, what you can see here is this area here was resistance and was the top here in June 2019 when Bitcoin topped out at 14,000, as you can see in this chart. And then of course, you can see we never saw price action inside of this channel until we saw this push above 10,500. And interestingly enough, we saw that this was an excess here, a big excess in price. This wasn't supposed to be there. And that ended up crashing down, bringing us down to that $3,900 level. But we know that in this channel, we were fighting to get above that resistance. And guess what happened today? We were fighting to get above that resistance. If you guys are a part of our Discord group, we actually called a short at 78.70. Why did we call a short at, 77.80? Why did we call a short at 77.80? Well, I knew that it was going to be the second test of this resistance line. And in the past, it's been a very tough place for Bitcoin to cross. And so you can see we tested this once, we tested this twice, and we saw a bullish engulfing candle come in, or a bearish engulfing candle come in and bring price action down back below 7,700. So we took that short at 77.80. It was a great position, great profits. Matter of fact, I was able to get in right at the top, so I've got that at a break-even stop right now. But realize that there is a potential we could continue up. And why is that the case? Well, realize a lot of what's happening right now is fundamental based. We're in this global pandemic. This huge sell-off was probably not going to happen if we didn't see the stock market crash. And of course, now we're seeing commodities, assets, Bitcoin and precious metals react to the global pandemic. And what we want to do is take a step back and not just look at Bitcoin, but also look at these other assets like the Dow Jones Industrial, even the subsectors inside of the major indices, and of course the NASDAQ and the S&P 500, right? Because those matter, including gold. So we'll take a look at those in just a sec. And remember, I have this on-chain metric that I want to show you guys that actually just today saw an all-time low. And the last time it saw an all-time low was in June of 2019. So you guys know how I love showing you those charts. I've got a very interesting chart, so stay tuned if you guys want to see that. I see we've got Chris Koss and Sean Ceron on our YouTube live stream. Good to have you guys. Cornelia says, nice, Naeem. Thank you so much. Mister says, finally catching up with your live stream. Glad to have you. If you can't be on live, well, at least you'll see the recording. So when we look at Bitcoin's analysis, we rejected ourselves from this resistance level. We know that that's the case. And there is a potential that we come down to the bottom portion of this bear flag, right? Because anything inside of this channel is fair play right now. So we do have this zone all the way down to around that $7,300 to $7,400 level in which we can play around here. And I hope we do, because that would be some great margin opportunities. We can take a long, maybe around 7,400, take that up to 7,700, take a short, back and forth until, of course, it breaks to the upside or the downside. And in my opinion, it's going to do exactly the opposite of what most people think it's going to do. And so if we have a bearish bias, it will most likely break to the upside. If we have a bullish bias, it will break to the downside. In my opinion, there's a high chance, and you'll see with the on-chain metrics that I'll show you later, we do break up to the upside before we see any downside, right? One thing we know about bear flags is we like to break down from the bear flag in the upper region of the bear flag, right? We don't like to sit at the support level, because that typically ends up not being the point of break, and for it to be a fake out and for us to go back into the bear flag. So what we do know is it's a high chance that we could break to the upside at this point, but realize that we're in this zone right now. Now, what are the two things here that stand out, right? Number one for me, the 100 and the 200-day moving average as overhead resistance right at that 7,900 level, right? Remember that $8,500 important key resistance that we need to break? Well, even below that, we have the 8,000 level that we need to get through, and that's going to act as strong overhead resistance. And we know that's going to act as strong overhead resistance, as those are major moving averages. And so those are the two things that initially stick out to me. And then, of course, we've got the 50-day moving average here as support right around that $6,600 level. Now, if we come down and we start to break these major trend lines around that $7,200 level and that $7,000 level, that will be the first confirmation that we may start seeing more of a bearish bias and a reversal in trend. Because right now we cannot say we're in a downtrend. You could assume that we're in a downtrend if we look at the weekly chart. You can assume that we're in a downtrend if you look at the daily chart. But at this point, we are in an uptrend. And I say that because if we go on a weekly chart, you can see we've already printed multiple green candlesticks. So we can't just say we're in a downtrend when we look at the 1 to 2 to 3 week time frame, right? When we look a month, 2, 3 months ahead, yes, we could still be in a downtrend, but we don't want to get into that. We want to focus right now on the data that's showing us that we're in between moving averages, and we're also in this channel where things could get really ugly for both sides, right? So we want to realize that that $7,300 to $7,400 level is going to be that first support here. That's just this support that's been holding here once, twice, 3 and 4 times. That's going to be the first breach here around 7,300 for us to start seeing any sort of weakness, and anything between that $6,900 and $7,100 level will most likely take us down to that 50-day moving average, where the bears will have a lot more opportunities to take control of price, possibly down to the 200-week moving average, as we've been looking to get an entry in for Bitcoin. So for those of you looking to get a long-term entry, we know that when Bitcoin did hit that 200-week moving average, if you're on our Discord, we posted that 5750 entry. It was a great risk to reward opportunity. But when you look at our video on Friday, you guys know I talked about the risk to reward right now not being the best, being the fact that we're at these higher levels where we could assume that price is expensive for now based on the data. Yes, we can sit here and say, okay, this is going to just skyrocket because the Feds are printing trillions of dollars in quantitative easing. We could sit here and say that gold just broke new highs since 2012, and so Bitcoin is going to start breaking new highs. But those are all assumptions, and once again, I'm going to take a step back for you guys and just give you guys the facts. So the fact of the matter right now is we're in this tight range, and we have to be very careful when it comes to any long-term long positions. That's why the majority of Bitcoin volume is derivative trading, and for the most part, it's because in a lot of situations, Bitcoin is stuck in a tight range, and both sides are extremely risky. And that's different than a market like the NASDAQ or the Dow, where traditionally it just goes up, right? It goes up, not because the Feds are printing, but because companies get smarter, companies get more efficient, more profitable, and they like to pay back their shareholders, right? So it's easy to go long in a market that only goes up, but with Bitcoin, it's a very volatile asset, and we have to be more careful. So that's what we're looking at right now. I hope you guys enjoyed a little bit of that, but I do have some very interesting on-chain metrics that we'll go back to Bitcoin and look at. But first and foremost, I want to point out, when we look at total cryptocurrency market cap, two big things stick out to me right here. We've got these converging moving averages with the 100 and the 200-day moving average. That typically is a bullish sign if we get squeezed into the middle of that. And so in my opinion, it's not going to be hard for Bitcoin to then move above that $222 billion market cap level. I'm sorry, our total cryptocurrency market cap, including the altcoins. And so a lot of signs are fairly bullish in the short term, but remember, the halving is coming up in less than 15 days. And in the past, we've seen a run up towards the halving before a sell-off. And whether that's the miners that want to cover their losses, cover their overhead, cover their 1 year, 2 year, 3 years of operating expenses, we don't know what it is, but that's just the data that we have from 2016 to the prior Bitcoin halving, right? So Dime2$ on Twitter says, watching here in Taipei. I love it. That's awesome. So looking at the total cryptocurrency market cap, we have these converging moving averages. That sticks out to me. And to me, that's a very bullish sign. Let's actually go back to Bitcoin really quick. I want to show you something very interesting. When we look at volume here, right? When you go on this weekly chart here, actually, let's just do the daily here. And you can see the volume profile to the right. I want to show you what's also pretty interesting. Look at all this volume that we have right now to face. We have this huge area of volume, and now we have to come and face this volume. So that's going to be right around that $7,900 level as well. So for Bitcoin to come and wick into 8,000, maybe even wick into 81, 8,200, towards that 100 and 200-day moving average, towards this high volume profile area, is highly probable. And we can assume that that is a possible scenario, right? For us to maybe go sideways and for the tricksters and companies to buy time off the clock over the next few days in this little channel, that's also very possible. But the point is, we can assume that an upside push is imminent if we continue on this bullish trend, right? And so realize that that's kind of the overhead view of what's happening right now with Bitcoin, and we will move on with the next chart, which is gold, because something interesting is happening right now with gold, and I want you guys to realize that at some point Bitcoin can come back and correlate with gold. And so it's good to watch this chart. We see a classic double top forming. We're most likely going to see a sell-off down to that 1663 area. If you were to ask me what's my perspective of what's happening right now, I think we're going to see another rush to liquidity here over the next few days or the next few weeks due to some mini black swan event. Who knows what it's going to be, but we all know it comes up, especially during a time like this where there's extreme volatility. When we look at something like the VIX and knowing that we're in a global pandemic, something easily could stir and shake the United States and the common civilians in Main Street, causing panic. And that is highly probable right now. So realize at the end of the day, something could happen. And what I'm expecting is another liquidity crisis, one more hammer to the nail, as I've been talking about in my videos over the last few weeks, to kind of put people back into place. Realize a lot of people are in quarantine right now. They're locked down and fear is going down, right? Alcohol sales are up. Marijuana sales are up right now. Everyone is sitting back, relaxing, chilling. They're not fearful anymore, right? 3, 4, 5 weeks ago when they started their 401ks going down thousands of points a day, they were fearful, but now they're not as fearful but it's a false sense of hope because the economy has yet to open up. And of course, when that happens, that's when we're going to see the markets react to the repercussions of what this pandemic has brought us. So realize with gold right now, I have a feeling that those that were able to get in from 1480 to 1550 are going to start taking profits, moving their liquidity to cash as we possibly start to see a correction in the stock market. So the next chart we want to look at is, how does the stock markets look? How do the commodities look, right? So we look at US oil first and foremost. I want to bring this chart up because guess what? For the most part, when we look at bonds, when we look at treasuries, when we look at the major indices, the Feds are pumping money into the economy, right? We saw major stimulus by the federal bank, and the only one that was left out in the recent CARES Act stimulus bill was oil. And so for me, I like to look at oil's chart because it's a chart that, in my opinion, is a lot less manipulated than the major indices. And a lot of you might say, well, the Feds cannot directly buy ETFs like stocks. But at the end of the day, what you guys don't realize is they're giving money to a lot of banks, and there are loopholes. And I guarantee you that there is something going on where the Fed's stimulus and quantitative easing is going into the markets. And the reason I say that is we bottomed out the day the Feds announced the $1 trillion stimulus package, right? And so March 24th, when the stock market bottomed, was also when that was announced. So there's obviously something going on. And what we do know is the oil companies and the oil industry was left out in that stimulus bill. So when we look at oil, and in the past, we could assume oil was an indicator, a leading indicator. It may have been a lagging indicator to what happens in the major indices. Because look, when we look at what happened here in 2008, the stock market crashed. Oil also crashed. When we look here, as of recently, when we saw the 2018, that late crash in December, we saw oil price start to plummet, right? And so oil has historically been correlated in some fashion to the major indices, but I'm not going to say it's a leading indicator. It's not one of my favorite leading indicators. My favorite leading indicator is the Russell 2000 because that encompasses the majority of the smaller businesses in the US economy, which is the backbone. And then, of course, you've got the transportation, the financials, and then we've got tech. Now, tech is probably the worst leading indicator because those are the bigger companies like Microsoft, Facebook, Apple, and of course, they're going to be doing well. But when we want to look at leading indicators in the market, I like to look at the Russell 2000. I like to look at the transportation, the financials, and we'll take a look at those. But realize oil is still on a downtrend. As a matter of fact, I hear in Venezuela, there's barrels of oil selling for $10. I know we all saw that negative oil price recently. Realized that that was just because the futures contract was ending that day. People didn't want to take delivery. And so they literally were paying other people to take delivery of those future contracts. And that's why we saw a negative price. But oil is not worth $0. It's not free. At the end of the day, it was just because of what happened with the future contracts. Of course, right now you can see the legitimate price for the June contract is actually trading at $11. And that's still historically one of the lowest prices that we've ever seen. And we could take this chart all the way back to 1984. And you can see that right now you can get oil cheaper than what it was in 1984. And so yes, there is something going on. And guess what? Oil is the only chart here that isn't a victim of quantitative easing. And realize that the quantitative easing measures will eventually fade away and the economy will correct itself to what it actually is. And so understand that oil's chart is still going down. So we pull up the Dow Jones Industrial, right? We look at this chart and you see you've got this bear flag that already broke. And what stands out to me is that we're above this 50-day moving average. Now, interestingly enough, when we look at the volume profile to the right, guess what we also have to do now? Look how much volume, this has stuck out to me the most. Look how much volume we're running into. So now we've got to face this volume. And when we've got Walt Disney World announcing 100,000 layoffs 2 days ago, and saying that they're going to apply for unemployment for all of their employees, when we've got over 26 million jobless claims over the last 5 weeks, historical numbers that we haven't seen ever in the history of the United States. This is worse than the Great Depression. You can't sit here and tell me that our economy is back to where it was January 2019. right? And so understand that you've got all this volume here to the right that we now have to face in the Dow Jones Industrial, which is a major leading indicator to the other major indices like the S&P 500 and the NASDAQ. So you can sit here and tell me that, oh, well, everyone's going to be on Amazon, whether we're in a quarantine or not, but understand that Amazon shouldn't be at all-time highs right now when there are 26 million people unemployed and they're only hiring 150,000 of them, right? And so, yes, they're doing good. They're probably doing better than they typically were, but I guarantee you they're not doing that good. And we actually looked at Google Trends and we saw that during Christmas of last year, they were actually getting more traffic than they are right now. So realize that when we look at the Dow Jones Industrial and we look at the data here, once again, I'm going to give you guys a neutral perspective and we'll take some questions from our audience and then wrap this up. But I'm just getting way too many people talking to me about this Bitcoin halving that's coming up. And they're saying, oh, it's in 15 days. Is this the time to get into Bitcoin? The supply gets cut in half. And what they don't realize is the fool's money comes in before the halving and the smart money comes out, because guess what? The smart money already got in. And so realize that with the Dow Jones Industrial, things don't look bearish right now. Things look bullish. But at the end of the day, we have to realize that the fundamentals are very bearish and it's earnings week. And tomorrow, Tuesday, once again, we're going to start seeing companies release their earnings. And up until the end of the month, it's going to be a very fragile and volatile time, in my opinion, when it comes to these major indices. So we have to be very, very careful. And when we move on to these subsectors, this is my favorite market leading indicator. This is the Russell 2000. You can see we finally saw some strength and we're coming in battle with that 50-day moving average. So we know the Dow Jones Industrial has a ton of volume to fight. And we also know now that the Russell 2000 is finally seeing some pressure from the bulls, right? Not only that, you can see we're seeing some good volume come in, right? And this is huge because over the last few weeks, the market was being led by the Qs, the tech, right? Microsoft, Apple, really it was Netflix, Amazon, AMD, these companies that are seeing new highs during a global pandemic. Those are the ones that were leading the major indices. But right now we're finally seeing the Russell 2000 make some positive movement. But guess what? We're only at that 50-day moving average. And so what am I going to be watching tomorrow? I'm for sure going to be looking at that 50-day moving average, the Russell 2000, and seeing what is the case here. Is it going to be rejected immediately, or is it going to fly right through? Because if it flies right through, that 50-day moving average becomes insignificant. So we look at other major market leading indicators here, and I'm going to quickly wrap up here because I have a very interesting on-chain metric I want to show you guys from Glassnode before we wrap this up for Bitcoin. So stay tuned if you guys want to see that on-chain metric. We just saw an all-time low today. The last time we saw that was in June 2019, right before a huge breakout. And I'm going to show you guys that chart in just a sec. If you stay tuned, I just want to show you a couple more leading market indicators. When we look at major indices, this is the transportation, got rejected from that 50-day moving average, finally seeing some traction and some rising volume. Very good. This includes all of the airlines, the cruise lines. So far we're seeing a nice, what I would call maybe a dead cat bounce, right? Of course, the Qs, this is the tech, this is the Netflix, the Amazon, seeing amazing growth right now above all three moving averages. That stands out. That's very bullish, right? We can assume these tech stocks are very bullish right now. We're above this daily EMA candle, right? And so we're looking really good here, but realize that at the end of the day, guess what we've got here? We've got this previous resistance line right here that is going to eventually come in, and we're going to have to see, are we going to be able to break that $220 area, right? Or is this going to go ahead and form some sort of a handle, right? So we don't know what's going to happen right now with the major indices, but what we do know is the leading indicators are showing that tech and the semiconductors, which have to do with tech, are really the only ones showing bullish signs. And we're now finally seeing the transportation, the Russell 2000, and the financials showing some signs of life. But I wouldn't say it's anything bullish at this point. It's still very neutral, but it does look like they're starting to move. And finally, we'll show you guys the financials. We've yet to come up to that 50-day moving average. These include all of the banks, for example, and this is most likely because a lot of people are expecting possible defaults with a lot of loans. And of course, that's why the financials struggle, but we need the financials. We need each one of these subsectors to succeed if we want to see any sort of bull market like we've seen in the past, or else all of this is going to crumble and we'll see new lows. We'll see another leg down, and that is going to affect Bitcoin and gold in a lot of ways. So my overall perspective, once again, we look at this Bitcoin long-term chart. We've got this halving. It's here in orange, right? The last time we saw this halving, we saw price action move up all the way up until that halving, right? And then you can see here, right now, we actually broke the big logarithmic support line that we were watching for a long time here. And so unfortunately, we are below this and there's major overhead resistance at 8,500. But guess what? Just like we saw before, when that weekly moving average crossed over, we saw that here. We saw price action upside. We can assume this was an anomaly, this downside action, because this was because of the pandemic. But now we're back on track to the upside. But guess what? Now we've got this resistance that was support that we have to face. And so realize that it's only 15 days until this Bitcoin halving. And what happened the last time we saw the halving? The dumb money came in, the smart money came out after, right? 40% downside. And so we could assume that maybe we come to 8,500 and then we come down, maybe form a second leg down before we continue to the upside and we see the big push like we've always talked about. And then that could eventually happen from here where we come back into this logarithmic trend. And so realize that we have this on the table. Now, for this to happen, we have to see price action to 8,500. Now, how probable is price action to 8,500? Well, first and foremost, as I already showed you, when we look at hash rate, we're starting to decline 15 days before the halving, right? That's not good. We formed a lower low. At first, we were forming higher high, higher low, higher high, higher low, and then we eventually broke that trend, right? So we don't know where this is going. I'm not going to sit here and have a home team bias and say I'm bullish or bearish. I'm going to show you the data and let you assume for yourself. Now, understand that when we go to the crypto and fear market greed index or the fear and greed index, you can see fear is starting to subside. We're at 28 when we were at 12 last month, right? 4 weeks ago. Now, here's my assumption on this. Everyone's still in quarantine. Everyone's still in lockdown. People are calm, right? Alcohol sales are up. Marijuana sales are up, as I've been saying. And that means that people are calming themselves down and they're not as worried about their 401k. They're seeing the markets go up. Things are okay. But guess what? We haven't seen the repercussions of this global pandemic yet. And once that unfolds is when reality will kick in and we'll see the markets correct themselves to where they need to be. And so realize that, yes, the fear might be subsiding right now, but that should be a little bit worrisome when we know that the majority of the world is still in a lockdown, in quarantine, and we have yet to come out and see what has the tsunami damaged. What are the economic repercussions, right? So if you guys are enjoying this analysis so far, make sure to like this video. We'll give away a book before the end of this video. And then I want to show you guys this on-chain metrics that I saw today. And I looked at this chart and what I found was we actually formed an all-time low. And the last time we formed this low was in June 19th. It was on June 19th, 2020. And so what I'd like to do is I'd like to go to price action and show you guys how price action was in June of 2019 on that exact day when we saw that all-time low form. And so when we look at this chart, once again, this chart is specifically showing us the active supply ratio, and this formed an all-time low today. The last time it did that was June 19th, 2019. And so when we go into this chart, what you'll see here is on that day here, June 19th, was a day that we were in an uptrend. So we initially had bottomed out. I'm going to move this out for you. We bottomed out here and we were in this uptrend and we were right here. And this was June 19th when we saw that chart hit an all-time low. And so we saw this chart today hit an all-time low. It hasn't happened since June 19th when Bitcoin was at this level here around 9,000. Guess what happened shortly afterwards? It was the last push to the upside before we saw the breakdown in price that eventually took us down to that $6,500 bottom, or you can assume it was that $3,900 bottom. And interestingly enough, when we look at this chart and we actually take this tool and we actually look at what pattern was forming here, you can see if we look at this, this with the polyline, we had this initial push up, we had this down, push up, down, and that was the last wave up, right? And so realize that right now there's a high chance, sorry about that, there's a high chance that as we've been talking about, we could possibly see, all right, let's get out of this polyline tool, trading view, Sorry, I'm using my second monitor, and so everything is delayed. And so if I end up clicking one wrong button, it messes things up. So realize that at the end of the day, we have this major resistance to fight through, and that's going to be that $8,500 level. So when we look at upside to downside ratio, when we look at risk to reward right now with entering a position in Bitcoin, in my opinion, it's just not the time in order for you to establish any long-term entries when we know we've got this overhead resistance and we have the Bitcoin halving coming up. And in the past, it has acted as an area where smart money comes out post halving as all of the fool's money comes in prior, right? And so when we look at risk to reward, we've got this potential 11% upside here. And so you can see it's an 11% upside with the potential downside here of almost 41%. So as an analyst, as somebody that has been in the Bitcoin market since 2010, being in this market, seeing how Bitcoin reacts, it likes to fool people, just like any other asset. It's not just Bitcoin, right? It's tricksters and company that come in and they manipulate the markets. And for Bitcoin being a $100 billion market versus gold at 11 trillion versus traditional major indices at 50 plus trillion, understand that Bitcoin is a lot easier to manipulate. And wouldn't you assume that the miners would rather sell at a higher price than a lower price? So why would they bring prices down before the halving instead of bringing prices up before the halving and then selling off and getting their best bang for their buck so they can cover their overhead, as now their profitability has been cut in half, right? So I'd love to hear you guys' thoughts in the comments or in the chat, and I'll be giving away a book to one of you guys. But I hope you enjoyed this analysis. If you did, make sure to like this video. Let's see, on YouTube, Sean says, times like this could take a few years to truly recover from this. It's like Ray Dalio says, it's almost like a tsunami has hit and everyone is stuck at home and they have yet to see the repercussions of the economic ramifications that have come from this global pandemic. And everyone is assuming things are okay, but in reality, it's the whales manipulating the market. And that's probably why when we look at subsectors and we look at the Qs, as we saw it previously, you guys can see that the tech is leading the upside right now. And we look at the major indices, you can see a lot of them are doing well, but the NASDAQ is really leading the charge. And I would say that that's the perfect market to manipulate at a time like this because of the fact that it's tech and people know people are still on Amazon watching Netflix. So it's a perfect month while everyone's in lockdown to finally get the markets as high as possible before seeing another leg down. And so if you guys appreciate this content, make sure to like this video. I'm going to actually exit early today. I'll see you guys on the Discord. The link is in the description. For those of you that caught that short today at 77.80, good for you. Keep that break even stop because I think that was a really good entry and hopefully we can milk that one. I've already taken 50% off the table on that one. And other than that, I will be back on the charts. See you guys on the Discord. Thank you so much. I wish all of you guys a very blessed and safe week, and I hope you guys are doing well during this quarantine. Thank you guys, Don, Josiah, Sean, Andy on YouTube. Peace out, snipers.